Hong Kong shares hit a three-year high Friday, leading gains in the region as investors weighed inflation data from Japan against tariff threats from U.S. President Donald Trump. Hong Kong's Hang Seng Index rose 3.76% to its highest level since February 2022, according to data from LSEG. The Hang Seng Tech Index added 6.15%. Shares of Hong Kong-listed Alibaba rose 14.7% following a significant profit increase for the company in the December quarter, driven by growth in its cloud intelligence division and e-commerce sector. Mainland China's CSI 300 rose 1.26% to close at 3,978.44. Japan's Nikkei 225 added 0.26% to close at 38,776.94, while the Topix traded flat to close at 2,736.53. Japan's inflation rate in January climbed to 4%, hitting its highest level since January 2023. Core inflation, which excludes prices of fresh food, rose to 3.2%, beating Reuters' expectations of 3.1%. South Korea's KOSPI ended flat at 2,654.58, while the small-cap Kosdaq added 0.83 to close at 774.65. Australia's S&P ASX 200 slips 0.32% to close the trading day at 8,296.2. Investors will continue keeping an eye on the Japanese yen, which strengthened to a more than two-month high of 150.52 per US dollar on Thursday amid bets of more rate hikes by the Bank of Japan this year. The currency is currently trading at 150.22 against the greenback. The Hang Seng Index climbed 2.93%, surging to its highest in 3 years, lifted by technology stocks. Leading the index's gains are Alibaba, which jumped nearly 13%, and state-owned telecommunications company China Unicom Hong Kong, which rose 12.09%. Lenovo traded 11.5% higher too. Other index heavyweights are in the green. Meituan is up 2.1%, while Baidu is 1.84% higher. JD.com climbed 2.99%. Alibaba shares surged in Hong Kong Friday following stellar quarterly results, boosted by growth in the company's cloud intelligence and e-commerce segments. The Chinese tech giant's shares soared as much as 11% and were last trading 9.18% higher. We expect the outlook for BABA's e-commerce business to remain strong in 1HCY25F, driven by the continued trade in subsidies, Nomura said in a note Friday. Japan's inflation rate in January climbed to 4%, hitting its highest level since January 2023. Core inflation, which excludes prices of fresh food, rose to 3.2%, beating economists' expectations of 3.1%, according to a Reuters poll. This figure was the highest since June 2023. The so-called core inflation rate, which strips out prices of both fresh food and energy and is closely monitored by the BOJ, climbed slightly to 2.5%. The headline inflation has remained above the Bank of Japan's 2% target for 34 straight months. After a difficult decade for MSCI China, Morgan Stanley says there is a slight improvement in the equity risk premium for Chinese stocks. Strategist Jonathan Garner upgraded the MSCI China Index to equal weight from underweight in a research note on Wednesday. Return on equity trends are improving in favor of China, per Garner. The upgrade has less to do with the top-down macro environment where our economists remain below consensus on nominal GDP growth in 2025, the strategist wrote. Instead, it is mainly a micro-bottom-up self-help story at the stock level in the context of a significant shift in index weights as weaker, more deflation-impacted sectors are much diminished in sector representation, Garner added. He noted that artificial intelligence enthusiasm is also boosting sentiment around e-commerce and internet stocks. The iShares MSCI China ETF is up more than 14% in 2025.